All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. So market opens up, gaps on down here, and has pretty much seen all sell pressure since the open and breaking the lows from this week and in a very bearish manner. There's no other way around it, in a very bearish manner. One thing that I find to be incredibly interesting is the total lack of volume here in S&P futures. A 30-point down day where it moves like this, we tend to see a lot of volume, a lot of minutes over 10,000, some into the 12,000 area. I mean, we're in the 3,000 to 5,000 area most minutes. So it's heavier volume than what we have been seeing. But it's not the type of volume, where we have seen on these types of days in the market. And nowhere close to any type of bottoming volume has come in, with the market or with S&P futures specifically. So, that could come in a little later, but so far nothing of that nature. It's a pretty ugly bloodbath out there. And in fact, if you look, I was watching the open, and on my scratch pad here was noting some of the stocks that were outperforming early because, as I mentioned this morning, some of the stocks that outperformed today, I do expect they will do pretty well going forward. And on my list and on my list of stocks with some of the outperformers, we had things like a Capital One, right? Outperforming. I mean, it was only down like 30 cents, 30, 40 cents. And, drop. So still a little early to really kind of say engage, okay, who's outperforming, who's underperforming, because we saw a lot of stocks kind of do this. Capital One, gap down, get bought into early, and then just kind of roll over. It doesn't mean Capital One isn't a nice outperformer by the end of the day, but, so far, can't really put into that category. There are only a few stocks that I can kind of put into that category here. To me, the best one is AT&T. And we talked about AT&T after earnings, and I got a little pushback because the earnings reaction was negative, and I just said, look, this is a stock that at a 6% yield, here's the history, right? And after it hits a 6% yield, we tend to see AT&T just go higher. And I know it has the HBO stuff and all of that, and all the media stuff and all that's there encircling the company, but 6% yield. And historically, that is an awesome time to be a buyer. Now, it popped here in about 2 days. I was away on vacation there, and then we saw it just kind of go into this consolidation mode. Today, starting to perk back on up here, and if you look at bonds rising, yields falling, you look and you say, well, AT&T, that's one of the most attractive yields in the market for a company that even if the world falls apart, right? You're not going to expect AT&T to kind of collapse the way you would a Caterpillar or the way you would a Alibaba or the way you would even a Microsoft, right? AT&T has a sense of stability, has gone through recessions and all of that type of stuff. And with that type of yield and looking and seeing bond yields go down, it becomes even more attractive here. And so we're seeing it outperform very nicely here today. And if you're wanting to buy upside for a little bit of safe haven in this market, to me, AT&T is one of the best spots overall. Verizon has some growth elements in it, but it's holding up incredibly well here, today as well. Verizon's yield is only 4.5%, so nowhere near that of AT&T. But it is one that now. Ultimately, I expect AT&T to outperform, but I don't think you go wrong with Verizon. So those are two of the spots. Yesterday, we talked about some of the credit card companies, the ones that held the money, the Capital Ones, the Discover, and I mentioned yesterday into the close, I'm not getting into these. I want to wait for a small pullback. We're getting a pullback today, right? And a little bit more than probably we would if market conditions were a little bit different. But, is it holding up to the point where I can go and be a buyer? Well, my risk reward is a lot better than what it was yesterday, especially if I want to use the lows from this week, right? It's significantly improved. The option values, just like everything, the option values have really jumped this morning. So I don't want to be buying it this morning. I want to let some of that IV come out that is pretty or flooded into a lot of options early on this morning. Here's Discover, same situation, same chart, same concept there. American Express, a little bit different. American Express is breaking the lows from this week and definitely lagging here a little bit. But overall, not going to get into these right here this morning as I don't have any bottoming sign on the market. And the IVs have ticked up. But later on in the day, we could see some action come in there. I talked about Micron this morning. This stock, it's one that I'll admit I had an order ready for this morning to try to go get into here near the market open. It just wasn't feasible. It never relaxed. It never chilled for a second. You can see Micron just, right away, yeah, the options were open, spreads were high, but you could just see it never really gave a chill out moment for me to jump in and knowing I have others following along. So, wasn't able to go get in. I'm not going to buy puts on it right here just with how extended it is to the downside. But, we definitely have the free fall elements in play in this market right now. When you look at things like a Micron, when you look at things like the semiconductor index, when you go into something like a Caterpillar. Today, the initial open of the market today here in the U.S. was, number one, an adjustment to what happened overseas, right? And we saw domestic names, including small caps, the IWM, hold up pretty well. And in fact, if I put in the IWM minute chart here, you can see the IWM did not gap down nearly to the same degree that we saw the S&P, that we saw the Dow, that we saw emerging markets, and it actually started to rally early. Okay, you can see what's happened to it subsequently. So there's kind of been two phases here early on. One was that adjustment to what happened overseas. And great, we have seen that. We have seen that pretty much every day, since the whole Turkish situation has started, where U.S. equities open, they adjust to overseas, and we tend to see the cats, more reactive than, some of the U.S. domestic names and things like that. We saw the banks react one day as, they adjusted. But we're now, we see today a change, and we're now in this kind of second phase here. And this second phase is knock, knock, knock. All right, the risk manager knocks on the fund manager's door and says, hey, the risk factors just went up. What are you doing about it? And the fund manager goes, geez, okay. All right, I'll go sell some Apple, right? And they're not selling Apple because they think anything has changed on Apple, or they're fundamentally bearish on Apple, or anything of that nature. In fact, they're going to want to buy Apple as soon as they can. But the risk factors have changed. They have to lower some exposure one way or another, and it does force selling in some of the top quality out there in the market, and we're seeing some of that today for the first time in quite some time. And generally, when we see that, there's going to be a little bit more selling before the bottom, but bottom is probably not too far away. And so we're starting to see that. I don't think we're looking at any type of bottom right here. I think there's probably more path of least resistance to the downside. Looking at what the technical switch has been, and it's one of those where we saw a drop on, what was it, on Monday, and it didn't really change some of the market internals. Today, the market internals are really changing. In fact, if the market were to close right here, right now, market internals actually triggering bearish, going from bull to bear, which we haven't seen happen for quite some time. Most of the time it's gone from bullish to neutral or something of that nature, but it's going bullish to bearish the way it sits right here, right now. And obviously a lot more can change, but when you look across the board, you look at what's being sold, you look at what, even how some of the sectors are moving. Look, it's the safety sectors holding up. It's the utilities, right? It's consumer staples. It's healthcare holding up. It's energy, materials, cyclicals, tech, industrials getting, well, smacked here today would kind of be an understatement, especially considering what this market has been. Knowing that it is August, you have to respect the fact that this could last for a few days and that we can see an absolute free fall. And oversold may not mean a heck of a whole lot. And, that has to be respected given the seasonality. And if we come in and we just look at the S&P and we look at, let me come in here to 5 years. Let me get rid of all the indicators. We'll just clean this up, make the chart bigger, and we'll just come in to 5 years here. If we go and look at August of last year, there was some selling, there was some pullback, there was some corrective action that came in. Here in August of 2016, not much. Pretty flat, pretty boring, pretty low volume. August 2015, here we go after consolidation. 1, 2, 3 days, smack. That is something that it doesn't happen every August, but we can go back in history and see plenty of August where there's this type of action. And that's my concern in terms of, looking at today's market and saying, okay, where do we go from here in the short run? The fundamentals don't justify, a big pullback. In my opinion, they don't justify it. Yes, we can go talk about valuations and all that stuff, and there's two sides to every single coin. But the short-run momentum here has shifted. The short-run momentum has definitely changed. And, something that I do think there's a pretty sizable chance that there are multiple days stacked on this, here overall. What would change that? Well, you know what? If we start to get some major volumes, come in where we start to see some big volume start to accumulate, where we see that, okay, yes, there's some sellers here, but, the buyers are starting to step back in based on, the heavy volumes. And so far, we're not seeing that. We just are absolutely not seeing that across the board. And, so to me, it just says, okay, still a little early to go anywhere near being a buyer here just yet. But ultimately, I do expect Amazon to be a very nice buy, right? But fresh break below the 7-day moving average, all right, no problem. I'll give it a few days to adjust, a few days to correct, no problem, right? Microsoft, same type of thing, all right, a few days, whatnot to adjust. And what I'll be looking for, in fact, this will, if we get a 2-3 day drop, right? I may not play it for the challenge. In fact, just looking this morning and seeing the option values inflate this quickly, I kind of, unless I see the absolute perfect setup, I may back away a little bit. But if it's a great time to be watching some of these sells, because those that sell off on light volume, those that, yes, they get taken down because of the market, but they're not taken down because something with them, that they just kind of drift on lower with light volume like a Microsoft, at least so far. Those are going to be the ones that outperform when the snapback comes. And I do strongly believe that we will see snapback come, and I do think this market fundamentally has the setup for a very nice run into the end of the year if we do correct here. And so some of those low volume pullbacks will be very interesting and very compelling. So as I look at the market, that's what I'm looking at. That's what I'm seeing. I looked at Alibaba this morning, said, do I sell some puts? It's so tempting. from a long-term standpoint, do I go and just sell some puts here? I come into something like the 160s for September. I can sell them for $4 here, which means that if they get put to me, my buy price is 156, which great. I have no problem being a long-term buyer of Alibaba at 156. So some of that bump in IV, it makes it compelling to sell some puts, to sell some options. Today I'll be looking at Disney in 110, and me, I have a long-term position in Disney that I want to add to, and the 110s here for September going for about almost $2. Those would be interesting because essentially I'm picking it up at just over 108. So we'll be looking at some of those as the implied volatility jumps, and as the implied volatility jumps, I will also be looking at some VXX puts. I'll likely be chatting in Sonny's ear saying, "Hey Sonny, what do you think? Hey Sonny, what do you think?" But it's one where this move up in the VIX, the one thing we know is the VIX always goes back down, and it's just a matter of timing that. We see the VXX up a good 12% here today, and I do think there's a risk that we see the VXX up even higher, but ultimately those will make for some nice plays lower, and I do think we will see those come in a little bit later. But so far, to me, path of least resistance for most things is down. Just a few small outperformers early on today, but not many. And, one where I don't think right here is the dip by chance. I don't think you close your nose and say, hey, you know what, let's go in, let me go buy this and this based on today's action. I think it's one where, do you look at something like a cat and say, okay, at 130, long term, multiple years, okay, or multiple months, sure. But I still think you probably get a little bit of better price if you're a little bit patient there with it. So anyway, those are my thoughts here on the market this morning. Again, not looking to jump in anything here just yet, but we'll be pricing out a few things. But you even go and look at some of the CAD options. The implied volatility has jumped a little bit. Definitely significantly greater. So, if I'm going to be right that the stock's hit a low and going to bounce, I better be right that it's going to bounce to a strong degree, because the options will lose implied volatility, and I will actually lose value on my call options as the stock goes up if it doesn't go up to a strong enough degree there. So I have to take that into account early on here. Okay. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.